Hi class, today we're going to be looking at chapter 5. We're going to be learning how to compute the state unemployment taxes and the federal unemployment taxes. You should be able to see your chapter 5 problem 1B. And since the SUTA rate changes are made at the end of each year, the available 2020 rates were used for FUTA and SUTA. So at the time this textbook was published, the rate is going to be 0.6%, which was used for net FUTA tax rate. This is a net FUTA tax rate, and what FUTA means is it's the federal unemployment taxes that employers have to pay, and the net rate is the gross rate of 6% less the credit of 5.4% that is given to employers who have a good rating with paying state unemployment taxes. So if employers pay their state unemployment taxes regularly, they will get to reduce the amount of the federal unemployment taxes that they have to pay. And so this net rate is 0.6% that they're using for the FUTA tax rate calculations. And again, FUTA stands for the federal unemployment taxes. Employers have to pay both federal unemployment taxes and state unemployment taxes. Now, in most states, the employers will only have to pay the state unemployment tax. However, there are some states now that require employees to pay. And it just depends on the state that your company is located in as to whether you're going to have to deduct from employees' earnings the state unemployment tax rate. So it's just on certain states. So there's a chart in your textbook, and that chart is over on page 513 of chapter 5. And that chart will give you a list of all the states and the state unemployment tax rates. So each state has its own individual state unemployment tax. For this particular company that we're going to be working on, the Zeno company, we have a state unemployment tax rate of 6.3%. Now, they didn't tell us which state they were operating in, but they just gave us the state unemployment tax rate. The taxable payroll for the year for both FUTA and SUTA is $77,000. What they want you to do in this problem is to calculate the net FUTA tax. And to do that, what we're going to do is we're going to start with the taxable payroll for federal unemployment taxes. The amount was $77,000 that was given. To find the taxes that the employer would have to pay, you simply multiply this $77,000 by the net FUTA tax rate, which is 0.6%. So I converted it to a decimal here, and then I simply multiplied it to show you how you would get the net amount of taxes that has to be remitted to the federal government for federal unemployment taxes. This company also has to pay, of course, SUTA taxes, the state unemployment tax. The taxable payroll was the same as for FUTA. It was given at $77,000. The SUTA tax rate is 6.3%, so you're simply going to multiply 77,000 times 0.063, and that will give you the net amount of the tax. And what they did is they combined both of these FUTA and SUTA taxes together, the tax payments together, to get the total unemployment tax that they asked for in Part C. So we're simply multiplying the gross wages times the SUTA tax rate to get the SUTA net amount, and we're multiplying the gross wages times the FUTA tax rate to get the amount of FUTA taxes that would be paid. So let's move to the second problem. In the second problem, we're going to be the Yingling Company. And the Yingling Company's payroll for the year is $593,150. Of this amount, $211,630 is wages that are paid in excess of $7,000 to each individual employee. The SUTA tax rate in this company state is 2.9%. That's on the first $7,000 of each employee's earnings. So they want you to compute the net FUTA tax. Well, right here, they've told you what the total payroll is. For FUTA taxes, and in this case, for SUTA taxes in this particular state, there is a ceiling of $7,000, which means that once you've paid employees $7,000, any amount above that is not going to be taxable for SUTA or FUTA in this case, in this particular problem. So in order to find the wages that are subject to FUTA taxes, you're going to start with the total amount of the payroll that was paid and back out or subtract $211,630 from that. That will give you the wages that will be subject to FUTA and also for SUTA, because the SUTA also had a ceiling of $7,000 for each employee that we paid at least $7,000 to. We have to pay taxes on that $7,000, but anything above that, we do not pay taxes on. So we have to determine first the wages that are subject to FUTA before we can determine the net FUTA taxes. And so the wages subject to FUTA are $381,520. I'm going to multiply that by the net FUTA rate, which is 0.6%. And I converted it to a decimal here at 0.006. And then I multiplied that, and that gave me $2,289.12. That's the net FUTA taxes that we would have to pay for unemployment to the federal government. The net SUTA tax, the amount of unemployment we have to pay to our state government, is subject to the wages that were taxable. And again, we're taxing the wages on the first $7,000 of each employee's earnings that we pay to them. Anything above that, we don't tax on. So that's why we subtracted to find the wages that were subject to SUTA. The wages that are subject to SUTA are $381,520. We're going to multiply that by the state rate of 2.9%, and that will give you the net FUTA taxes of $11,064.08. The FUTA tax and the SUTA tax combined will give you the total unemployment tax of $13,353.20. So I'm going to look at the next problem. And on this problem, we're going to be Garrison Shops. and we had a SUTA tax rate of 2.7%. The state's taxable limit was 8,000. Notice it depends on what state you're in as to what the ceiling is or the taxable limit is in that state. Again, you can find the state and the ceiling amounts on the figure 5.1 on page 513 of your textbook. But in this case, they've given you the state's taxable limit, which is 8,000. So they are going to pay their employees, if they pay them $8,000, they're subject to SUTA taxes. But anything above 8,000, they're not subject to the SUTA tax rate. So it's kind of saying like the employer is only going to pay taxes on the first 8,000 that's paid to each employee for state taxes. For the year, Garrison Shops had FUTA taxable wages of 77,900, and they had SUTA taxable wages of 93,900. So they want you to compute the net FUTA taxes. So what I did is I simply picked up the amounts that they gave us for FUTA taxable wages. I'm going to multiply that by 0.6% to get the net FUTA tax of $467.40. The earnings that are subject to the SUTA tax was given $93,900. We're going to multiply that by the SUTA tax rate of 2.7%, and that will give you, I got a typo here, SUTA tax that was paid by the employer of $2,535.30. So let's look at the fourth problem. And the fourth problem, it gives you some more information. It says, due to its experience rating, Llanelli Incorporated is required to pay unemployment taxes on its payroll as follows. An experience rating is a rating that we keep up with for companies who have paid their SUTA taxes on time, and they haven't laid off a whole lot of employees. You're going to give them what is called an experience rating, which just means you give them a tax break on their state taxes. So this particular company, Llanelli, is located in several states, and each state has its own SUTA tax rate. And again, you can find the states, a list of the tax rates on figure 5.1 on page 5-13 of your textbook. So Llanelli is located in New Mexico, and the SUTA taxable payroll for New Mexico was $28,000. So in other words, this employer paid employees an amount of $28,000. The state contribution rate was 3.9% for New Mexico. So to find the SUTA taxes paid to New Mexico, we simply take the amount of wages that were paid in New Mexico and multiply that by 3.9%. That was the rate for SUTA for New Mexico. When you multiply these out, it gives you $1,092. That's the SUTA taxes that they paid to the state of New Mexico. But because this company was also located in Colorado, Colorado has its own SUTA rate, which is 7.15%. And their taxable earnings were $23,000. So again, we're just multiplying to get the SUTA taxes that was paid to Colorado of $1,644.50. We also are going to be looking at paying taxes in Utah, because this company was also located in Utah. Utah's taxable payroll was $65,000. We're going to take $65,000 and we're going to multiply it by the state of Utah's rate, which is 0.041 or 4.1%. And the amount of unemployment taxes that we pay to Utah is $2,665. And then in the last scenario, they want to know the federal unemployment taxes that this particular company is going to have to pay. And it's based on a taxable payroll of $94,500 that they gave you. We're going to multiply that by the net FUTA tax rate, which is 0.6%, or if you change it to a decimal, 0.006. Multiply these out, and that gives you the FUTA taxes paid. So this was just showing you a company that was located in several states, and you have to pay the state unemployment tax based on the rate that the state has assigned to you. And again, you can look at your chart to see what your rates are in case they don't give you the rates. Most of the cases, they're going to just give them to you. In the next problem, problem 5B, the Cohen Company began operations in August of the current year. During August and September, the company paid wages of $2,450. For the last quarter of the year, the taxable wages paid amounted to $3,900. None of the employees were paid more than $7,000 per year. So what they're telling you is that all of this is taxable. So this particular problem had a question for you. It says, is the Cohen Company liable for FUTA tax? And the answer is yes. The Cohen Company is going to be liable for FUTA taxes as long as they paid wages of $1,500 or more during a calendar year. Notice down here, I put a note to this. So all companies that pay employees more than $1,500 have to pay FUTA taxes. So the answer to that is yes. And then in B, they want to know what is the net FUTA tax. And so we have to figure out what the taxable wages are. And so I combined what they were paid during the year, during August and September, plus the $3,900 for the last quarter of the year. Those two added together are $6,350. We would multiply that by 0.6%, and that will give you $38.10 that is owed in FUTA taxes. So that's all I want to talk to you about today, and we'll see you the next time. I'm going to stop sharing this with you, and we'll see you later. Bye-bye.